Yes, sir. Bring it in. Everybody bring it in. Bring it in. Like we called yesterday, everybody go check out yesterday's video. Guys, we are in a window of time to shake and bake, baby. Meme stocks. It's time to get lunch, baby boys. But listen, first I want to show a quick video right here what our boy Charles Payne talking about with one of the, I think Brian Westberg, the inevitable recession that's coming, which, guys, maybe I'm crazy, but I feel like we're in a recession already. So I understand how they're trying to make it seem like it's something that's coming, but that's neither here nor there. We're not going to dabble all in that. I'm not trying to be erased like the Cash App owner or anything like this. All right, but anywho, let's check out this clip, and at the end, we're going to have a little discussion about our AMC play. Let's get down to it. Yes, sir. Yes, sir.
Now, but the squeeze is on. You know what I'm talking about, right? The New York Fed Consumer Survey out today. A record number of households reporting that it's harder to obtain credit than it was a year ago. This, of course, as we learned that the last 2 weeks saw the sharpest contraction in bank credit in history. So what's it mean for the economy, and which many economists still label as very strong? I'm going to bring in now First Trust Advisors Chief Economist Brian Westbury. Brian, the credit crunch has begun. So where does it go?
Here we go, guys. Now, remember, I said what's coming is going to be worse than 2008. This is 2008 2.0. We've got people out of jobs, no money. The money's not worth anything. Bad loans on the money that's not worth anything, that's not even there. And then to top it all up, we got a credit crunch that's coming in off the bad money that's not even there. That's about to soon not be worth anything, which it hasn't been worth anything since it was not backed by gold. Oh, boys.
Yeah.
Oh, boys.
Yeah, I mean,
XRP, Tesla, NVIDIA, Cordana.
Kind of the canaries in the coal mine, if you will. Look, for COVID, we just pumped the system full of money, handed money out like it was candy, and it's now over. It's like we were on morphine, and now it's wearing off, and we're going to have the hangover. And so none of this is a surprise. We're going to see more delinquencies, more defaults. All of this is going to happen as the Fed raises interest rates and stops the...
Guys, mind you, they got another 25% that they said they have to drop that's coming in this month. Guys, they're about to get toasted. They went from 0% to going up to a 6% interest rate. That is rocking people, and especially people that were dealing in bad business, hedge fund shorting with unlimited cash. Oh yeah, baby,
easy money.
You know, it's interesting because households seem to be getting it. We've seen the savings rate erupt off the lows. It was the second lowest in history. That's come on. And then Friday, even more evidence. We saw consumer credit far less than expected. Non-revolving credit was up 5%. But for the most part, it feels like households are bracing for something that I don't even know if economists are talking about it.
No, I agree with you, Charles. Look, when we flooded the system with all of that cash, some people needed to spend it because they didn't have incomes. Others were getting cash on top of their incomes. So we really have a bifurcated economy today where the savings rate looks
essential
high,
worker.
but for a lot of people, it isn't. And so I don't know how we don't go into a recession after what we did. We didn't feel COVID. We locked down the economy, and yet spending on goods, for example, was 1.3 trillion higher than it would have been if it stayed on trend. I mean, so you look.
And just to tap in there, guys, we're not going to get too far in this, but obviously, like I said, guys, they pushed that money out to a lot of the minority people, a lot of people that didn't have money, more poverty-stricken areas. That money was immediately spent back up, even with them pushing down to the middle-class people on flights and vacations and stupid, I'm about to try to be an entrepreneur. All that money was literally just created and sent back to the 1%. I'm going to leave right there. Like I said, I ain't trying to get annihilated.
People had cash even though they weren't working and even though they couldn't spend on services, and now we're in kind of the hangover period after that, and I don't see how we don't have a recession.
Yeah, but we did have a lot of fun, though. Let's talk about your piece this morning. I read how to lose reserve currency status, and it was a not so random walk down American history. I appreciate that. I'm a history buff. Put it in perspective for the audience.
Yeah, sure. You know, so everybody has been worried, right? Saudi Arabia, Brazil, China, Russia, they're all making noises, want to price oil in yuan. And now we have these, you know, your hair's on fire, end of the world stories about the U.S. dollar as the world's reserve currency. And I guess my overarching statement would be that the U.S. economy is not strong because we're the reserve currency. We are the reserve currency because we've had a strong economy, and we've had a strong economy for 200 years because of the Constitution. We have the rule of law, we have respect for property rights, we have a democracy, and for the most part, free elections, and as a result, that's what makes our currency so valuable. The only country that will ever take it over is a country that does better than us at all of these policies, has a better monetary policy, has lower tax rates.
We might be fraudsters, but guys,
freedom. And
let me pause this. We may be fraudsters over here, but we still got guns and we still got law. Don't forget that, because like I said, y'all, everybody, oh, I'm going to fly out of, hey, you better get ready and hunker down. This is a global reset. Guys, it ain't nowhere safe to be. And if you call yourself want to run outside where it ain't going to be no laws where this stuff is going down, okay, that's on you. But like I said, this guy brought a valid point here. Times are getting scary, but you can be a fool, or you can know that this economy is going to bounce back, and you can be placing that money in things that are going to be the builders of the bounce back. XRP, cryptocurrencies, because you know that's going to have to be the new form, the new asset. Because the dollars, again, it's now the value, and that's going to go to nothing. But there's going to be a shift. America's going to go on. Great Depression happened. If they could come back out of the Great Depression, hey, sorry to tell you, brother, it's all about investment. And those people that was investing through the Great Depression, I bet their family never have a depression again. But let's finish this out.
I got some stuff to finish up here with the end. Are even close to that. Russia and China and Saudi Arabia, they are not free countries. So they're not going to be the currency, and they're not going to take over the dollar.
All right. Brian Westbury, you know, I can almost hear like the national anthem playing in the background.
Listen, I'm telling you.
Thank you so much.
Hey, yeah, Patriot. Okay. Hey, I like that. Hey, I feel like everybody need to hear that, but also there's good information that's coming in. There's a reset that's coming nonetheless, guys, but that's a good thing and a bad thing. The bad thing for those that are unprepared, a good thing for those that are, because this is about to give a chance for the last chance for people that are have-nots like us to become haves. This is that generational wealth transfer that's occurring now. You're watching companies come down to dollars. Tesla at a 160, Amazon at 100 something. Okay, if this don't click, then nothing will. But now let's double tap in, guys, with our AMC play, guys. Like we talked about yesterday, we were looking. I already told you the play has gotten out of control for hedge funds. We're in a double black swan event with the financial market collapse, the credit crunch that's coming in. There's no liquidity. And then to top it off, the switch they were supposed to have to go ahead and be able to settle this out before this storm came in, what was delayed by a judge. That's the second of the black swan events. But we're just double tapping in it, guys. We broke above that 516 key level. And like I said, we broke and we've actually held it. It looks like, well, we might be bouncing off of it. But we broke above. We're going to see how it goes through the rest of the day. But obviously, this is a live chart. We're wanting to hold above it, but where we at? Let me see. All right, we're good. We're at 521. So we're above that 516 level. We want to see a hold above that. Like I said, the next move that we're trying to do is go right above this. What is that? 537. A break and a hold above that is going to send us up towards that $6 range, guys. That's where our next major key level of resistance is. But like I said, everybody needs to keep their head on the swivel. As we mentioned in yesterday's video, they are borrowing at 200,000 shares at 800%. And obviously, as we see today, it's at zero. There's a lot of talk about, oh, there's no zero. There are 0 shares available to borrow, guys. The way they're able to get shares, they're catching some people for share lending. They're, obviously flooding some people out. Some day traders are swinging out and swinging in, and they're trading the same blocks of shares. They can use 100 shares and do it 70 million times, That's going to make the same price inflection. But what they can't do, though, is when you see the cost of borrow rising, that means that the amount of shares they need to compact that is not there. There's no shares. There's not that's what that is. Double pulling up here. Oh. Let's go on through here. Cost of borrow rate, 870. 870.31 with a short interest of 25.14, which means we are steadily climbing in short interest while the price is going up, guys. I got to restate and state this again, guys. We are in the midst of a black swan event. This has gotten a minch out of their control. We have a window of time where we're going blow for blow with them. We're in a tournament with them right now. They can't cheat right now. They can't cheat. Of course, they can cheat when we say they can't, but they're not going to be able to have the same power, if that makes sense. The shares are gone. The cost of borrow raising is just an indicator of the fact of how torches get. And if you want to catch on to something, see how bad it is for them. How many times has your leader, AA, ran to try to figure out some way to do a forced dilution? We got the Amazon news. Then the, what was it? That he was settling. Settling? That means that you owe all the shareholders. You just admitted that April's a fraud. Settled on a fraud case. How do you do that? Then that gets kicked back. Immediately, there we have this talk about this Cinemark. Some people are saying that was sitting up on the website. I have no idea. I'm just keeping my head on a swivel. But what I do know right now is that this is free range, and I'm throwing as many rights as I can at them. And I suggest everybody else does as well. We're on a climb. We want to see some confirmation. I hold throughout the day. Obviously, we closed above it, but I want to see us make a move towards that 537 and break and hold it. That's going to be a little indicator to me. That's going to be like, okay, which I believe is coming in the next few days. Because like I said, we've got a lot that's pairing in, not to mark that they've got more interest rates coming in. There is no rest for the wicked. I'm going to tell you like this. There's no shoreline for them right now. They in the middle of the ocean with this one. Hopefully all things keep panning out. But like I said, keep your head on a swivel. Get ready for smart investments, guys. Once this money comes from us, you got to know what moves you're making after that. Obviously, we're going to be talking about all those different moves. As I mentioned, at some point this week, I'm going to come through with how I build a bulletproof portfolio for my long terms. And then I have my Weeble, which I do my swing trades and all that good fun stuff with. But you need to be preparing through this. While we're getting the joy and the entertainment of stock, just realize these things are actually happening outside as well. So, like, the collapse is occurring. So you need to be addressing and hedging. It don't make no sense for you to be ahead of most taxpayers or civilians, but just because you've taken the steps to find about the financial markets, but you're not utilizing it in your real life. If you're seeing, oh wait, banks are failing, yeah, you might need to start looking at other ways of equity. What companies are making it through this? It shouldn't just be a la-la land and people just freaking out like NPCs. That's all I'm sticking at. But guys, hey, listen, love y'all putting up. Hey, as always, hey, it's a joy coming in and being able to have this conversation with y'all. Guys, we own to something, as we mentioned from the Mondays video. Y'all go check that bad boy out. Short and sweet. But I personally believe that we are on a decent uptrend. I think that we're going to walk this thing up. Just look for that keynote, that 537. You break above that 538, hold. Smooth as a goose. Smooth as a goose. And like I said, you can see that all the way over here. Now look how long we've been down. Boom. Hey, like I said, it's not a technical play. This is, and realistically, I don't believe in technicals in any play as far as just the technicals. You know, there's an involvement of what's going on with the stock. Obviously, with this one, though, this is a whole nother type of world of game. So this is how we kind of predict these things or talk about these things, because we're just adding two and two together. Glitches, him rushing. He's running as much as he can to try to get to switch and dilute the stock. If that didn't tell you we on their neck, I don't know what does, guys. But like I said, hey, y'all, hold it down. We're going to become more content, guys. If you like the content, please like and subscribe. I appreciate all the support. And like I said, y'all are making a dream come true. Hey, hold it down, boys, and get ready. I think we're walking into some cash, baby. Let's get it.